Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders for Elliott Wave Trading. Our website 24elliottwaves.com for general trading, stochastic.macd.com. The title of this video is how to combine the Elliott wave theory and the Pitchfork tool. All right, how to combine the Elliott wave theory and the Pitchfork tool. All right. Today is the 10th of February 2014. The time in London is 49 minutes past 11 p.m. In New York, 49 minutes past 6 p.m. Let's get started. All right. So I have done my homework already here. Following our guidelines, you can see that there was a correction here around this session where I'm moving my cursor. We are now on the monthly chart looking at Priceline.com Incorporation. All right. This is an American stock listed on the Nasdaq 100. So there was a correction first, and then we have a pause period or a balanced market, a consolidation in this session. And as always, the first Elliott wave that will break out of the consolidation zone. This is the first Elliott wave from here to this level here, which are highlighted, okay, in green on this chart here. So you can see that this is a normal market pattern. There was a, because we can't see what has happened before, you can see there was a correction, and then we have a pause period, okay, and then now we have a new cycle that has begun, and from here to here, this is the first Elliott wave. Okay, then from this point where my cursor is down to this point, which are highlighted in turquoise, this section here, this is the second Elliott wave. All right. The third Elliott wave is a complex Elliott wave. In this case, I will highlight it and color it in red. Okay. So the price move from here all the way up here. This is the third Elliott wave. In this case, we have a complex third Elliott wave because it has been divided into 5 minor waves. First wave, second wave, third wave, fourth wave, and the fifth wave. These are minor waves. First minor wave of the third wave, second minor wave of the third wave, okay, third minor wave of the third wave, and the fourth minor wave of the third wave, and the fifth minor wave of the third wave. From here to here, this is a complex third Elliott wave. All right, but this is quite easy to count this way because you can see that there was a correction here, and then we see a consolidation going on. So usually, if a new cycle is going to start, it usually come out of a consolidation session following the normal market pattern, okay? An imbalanced market pattern, a correction, a pause period, an imbalanced market, a correction, okay? A pause, okay? And again, a new cycle is about to begin again. This is what's happening here. So first wave, second wave, and the third wave. Now from here down to this level, that's the fourth Elliott wave. And from here to here, that's we are still in the fifth Elliott wave because it's not yet completed. All right. So this is about the wave count. Now, how do we combine, okay, the Elliott wave theory with a Pitchfork tool? How can we use the Pitchfork tool with the wave trading? This is what we are discussing here. Now, the best time to use the Pitchfork tool when we are using the Elliott wave theory is to determine, okay, the end of the fifth wave. If we want to forecast the end of the fifth wave, if we want to manage our trade during the fifth wave, the Pitchfork tool is the best tool to use if we are in the fifth wave. So to combine the Elliott wave theory with the Pitchfork tool, the best time and the best place to use it is during the fifth Elliott wave. All right. So here we also account the first wave from here to this level, and then a second wave, third wave, fourth wave. Now we are on the fifth wave. So the fifth wave is still underway. It's not yet completed. This is the time when we must use the Pitchfork tool. By the way, if you want to know more about how to use the Pitchfork tool, I will refer traders to our website www.dayprotraders.com. That's where you can learn about the Pitchfork tool, talking about advanced trading. But if you want to know about the Elliott wave trading, it's www.24elliottwaves.com. So we are in the fifth wave for this Priceline.com incorporation. So I'm going to grab my Pitchfork tool here. And how we do, we need a 3-point when we're going to use the Pitchfork tool, 3.123. So I put it now on my chart. You have to put, the median line of the Pitchfork tool at the low of the third Elliott wave. Now this is how we use the Pitchfork tool with the wave trading. So we put, the median line of the Pitchfork tool at the low of the third Elliott wave, and then we highlight the range of the fourth wave by adjusting our Pitchfork tool like this. So this from here to here, that's our fourth Elliott wave. So we put the median line of the Pitchfork tool at the low of the third Elliott wave, and then we highlight it, the fourth wave with the Pitchfork tool. So you see how I did it here. You see, okay? So the Pitchfork tool is formed of 3 parts. See 3 lines. See this are the first line, the upper line, the middle line, and the lower line. So we use the lowest point of the median line we put it at the low of the third Elliott wave, and we put right here, the upper line of the Pitchfork tool at the beginning of the fourth wave, and we put the lowest part, at the lowest point of the fourth Elliott wave. This is how we use the Pitchfork tool, when we are wave trading. Now, what do we need to pay attention to? All right. So when we put our Pitchfork tool like this, the low here, and then we highlight the fourth wave like this, because the fifth wave is underway, so which means the trend line of the fourth wave is kaput. The price break above the trend line of the fourth wave, and find a support. So you see this red candle here. So the price break out of this bearish channel, and then retest it here. And the fifth wave is underway. You see, so we were somewhere here. So we must watch the median line. You can see some traders were selling along the median line. If we have a stock that is not dynamically bullish, sometimes the stock will fail right here, which means the fifth wave will fail to go above the high of the third wave. So if trader decided to sell it, if the fundamentals are not very solid, the price may find it even difficult to break above the median line of the Pitchfork tool. You can see traders were selling here, yes or no? You see they were selling along here, yes? But in normal condition, stocks that are normally very bullish with a strong fundamental, the fifth wave will exceed the high of the third Elliott wave. So in that case, to forecast the end of the fifth wave, we will use the Pitchfork tool. So we will expect, so we were here, you see, so fourth wave has been completed, trend line is broken, retested, price start going up. We will expect the price, the fifth wave, to end somewhere along the upper side, somewhere in this region, along the upper side of the Pitchfork tool. This is how we will use the Pitchfork tool to forecast the end of the fifth wave. This is how we can combine the wave trading with the Pitchfork tool. So by using the Pitchfork tool, as the fifth wave is underway right here, we are monitoring, we are watching the upper side of the Pitchfork tool, expecting trader to sell or to terminate or to close this trend somewhere here. So we will expect the fifth wave. So when we are here, we will see target zone. You see here, we say target zone along somewhere along the upper side of the Pitchfork tool. Now you can see now that the price did not come down. It went above the upper side of the Pitchfork tool, break above it, and now it retests it and start going up. How do we handle that? Sometime, if the stock is very bullish, we may see the fifth wave being extended for various reasons, all right? So now you can see that it breaks above the Pitchfork tool, which is our first target level, all right? The price does not, as you can see here, these are the guidelines that we follow. We will take profit here. So if you were buying during the fifth wave, you will be prepared to manage your trade as the price coming near the media line, and also when it's coming on the upper side of this channel, okay, you will be taking profit or securing your gains. So now you break above it like this and retest it and find support. How do we manage that? We will draw a channel, which I'm going to show you now. Pay attention carefully. How we use the Pitchfork tool. Instead of using another Pitchfork tool, all we need to do is to draw a channel. Hold on a second, I'm going to explain it to you now as I'm focusing on my drawing. What we are trying to do, you see this Pitchfork tool, we have two channels, you see, the lower channel here, this section here, and the upper channel right here. All we are trying to do now is to project one of these small channels to the other side where the price break above, okay, the Pitchfork tool you see here. So I have one channel here, the one small channel here, okay, these two lines, and then I have another channel here. So the Pitchfork tool is formed of two channels, yes or no? Okay, so what we are trying to do is to project one part of the channel, the small side, you see this side, we project it to the other side. Equal size, okay, equal size, we bring it here. So if you accept that this is the equal size, this will be our new target level for the end of the fifth wave. If it break above that lines and the find support again, we will project the same size of the channel to the other side. We can keep drawing this line if the stock is very, very bullish to determine the end of the fifth wave. This is how we can combine the wave trading or the area wave trading with the Pitchfork tool. This is how we can use the Pitchfork tool when we are using the Elliott wave theory. All right, but the most important thing you need to remember is that the Pitchfork tool is very useful during the fifth wave to determine or to forecast the end of the fifth wave. One will put the low of the Pitchfork tool, or we'll put the median line of the Pitchfork tool at the low of the third wave, and we'll highlight the range of the fourth wave. As you can see here, the first target is at the edge of the median line for stocks that are not very, very bullish, okay? But ultimately, the ultimate target for the fifth wave is somewhere along, remember, somewhere along the upper side of the Pitchfork tool. If the price breaks above the Pitchfork tool, we will project the channel to the other side, okay? So this is our new target. So we will say that probably the price will change direction somewhere along this line here. All right. If it goes above it, as it did here, it break above and retest and find support. So we will use the next target level. All right. It makes sense. It is also powerful. I also need to mention to traders that when we are counting Elliott wave, one must not use a single time frame. So now you can see that I was on a monthly chart to count my wave. It will be completely wrong to stop on this monthly chart after my wave count. I have done my homework. You have to go to the higher time frame to align, okay, the fractal property, so to speak, the fractal nature of the wave patterns, okay, which means the higher time frame command the lower time frame. One must always validate the wave count on a higher time frame. So we use, okay, the higher time frame, okay, to validate our wave count. We can use the lower time frame to zoom into the internal wave of a higher degree, if you understand. So these are the exercises, these are the steps that we follow all the time. We know that the first way we break out of consolidation zone, but sometimes if you made a mistake, for instance, you made a mistake with your wave count, after going to the higher time frame and going to the lower time frame and zooming to it, you may notice that maybe you violate one of the Elliott wave rules, okay, which you shouldn't, or something did not add up properly, which will alert you and you can quickly rectify the mistakes that you have made. All right. So this is how we do. So for instance, if I go to the yearly charts, okay, you can see that there was a consolidation here. You see, consolidation. Then a breakout, which is my first wave. This red candle here, this is my second wave on the yearly chart. We are now what? Okay. The wave that you can see here, okay, we are now in the bigger cycle, all right? The bigger cycle, all right? Here we are now, you see? So 1, 2, okay? 3, 4, 5, we are now in the fifth wave, okay? All right? It makes sense? So 1, 2, okay, 3. Here you can see this candle here. That's the fourth wave. And now we are now in the fifth wave, all right? So if you count wave on one time frame and you look on a higher time frame, it doesn't add up. You can see that the market pattern, what the key thing we need to pay attention to is the market pattern. So again, here there was a market pattern, a yearly chart, a consolidation, a breakout, a pullback. Now the price running away, all right? It's running away like this, okay? So if I go back again to the monthly chart, okay, you can see clearly that on the yearly chart it looks a bit compact, yes or no. But on this monthly chart, we can see all the internal wave of the yearly chart, because on the yearly chart it looks like one move, but in fact you can see that there was a pullback, and now this is okay, the fifth wave, and we can use the Pitchfork tool to determine, okay, the target zone, okay, for this stock, all right, for the end of the fifth wave, all right. To summarize this video, if one wants to combine the Elliott wave theory with the Pitchfork tool, the best time and the best place to use it is during the fifth wave. One will highlight the range of the fourth wave and put the median line of the Pitchfork tool at the low of the third wave. If the price, the target zone is the upper side of the Pitchfork tool, but if the price breaks above, okay, the Pitchfork tool will project the channel to the upper side as I did here. One should also understand that when we are counting wave, we are going step by steps, all right? So sometimes you count waves. You see, you make, for instance, if you were here, all right? You were here. Suppose you just count this way, 1, 2, 3, 4, 5. You may say, okay, this is a multi-wave. We will expect a correction if you stop only on this time frame. But if you go to the higher time frame, you may notice that these are minor wave of another wave of a higher degree. That's why it's so important when you are counting wave, when you are using the Elliott wave, whatever you are doing, you are going step by step without assuming anything. All right, that's what we are doing. So at this stage, with the information that I have, this is the wave count that I can, okay, achieve here. I leave it as it is. If the market is progressing, if we are wrong, we will notice straight away that something did not add up, and we can notice that, or either we notice that, okay, the 5 waves that we have count is just a minor wave of a higher degree, and that a 5 wave may be just the third wave of a higher degree, or another impulsive wave of a higher degree. This is very important for us to go step by step without assuming anything. The mistake that a lot of Elliott wave traders are making is that they count the waves. So for instance, count 1, 2, 3, 4, 5. They say this is the end of a cycle. So whenever you think that this is the end of a trend, think of this is the end of a minor trend. A trend on one time frame can be a minor trend on a higher time frame. So sometimes trader will come 1, 2, 3, 4, 5 wave, and they say definitely we're going to have a correction, and you don't see a proper correction because the wave count on your time frame is just a mini cycle of a bigger cycle. All right. So do not call for the end of the world when you count 1, 2, 3, 4, 5 wave. Check the higher time frame. With the information that we have here, I can only look on the yearly chart. So we want to go step by step without assuming anything. I hope you have learned something for this video also about how to combine Elliott wave theory and the Pitchfork tool, and we put into use, okay, to make excellent trading and investment decision. As always, if you have any question, put it below in the comment section and we will get back to you. But if you are TSTW trader, you can contact us directly and we will get back to you. Until the next time, enjoy yourself and be very happy. This is about how to combine the Elliott wave theory and the Pitchfork tool. Thank you for watching.